Qualcomm just closed out on a heavy 7.57% to finish at $189.39. If you look at the multi-week tape, this asset is riding a deathly roller coaster, dropping 25%, ripping 20%, then wiping out the entire bounce. Chasers are flooding my desk, asking if the macro trend has completely flipped bearish and if smart money has left the tape. Let's look past standard retail indicators and unpack what the big money is actually executing. Forget basic retail charts. The market makers can print any head and shoulders or double top patterns they want to trigger emotional stops. The long-term trajectory is dictated by pure spreadsheets, and QCOM's story is just heating up. If you love front-running high-beta tech rotations and dissecting institutional order books, smash the like and subscribe. To track our private desk metrics and daily charts, hit the community link in the description below. QCOM isn't bleeding alone. Since early June, macro headline risks, geopolitical friction, and the broader tech index markdown forced tactical desks to flatten risk and book profits. This flush is an unhedging event, not a terminal flaw. Look at the order book mechanics through this entire liquidation cascade. The key structural floor at $185 has refused to snap. If mega-cap blocks were undergoing true structural distribution, this pivot level would have folded long ago. Furthermore, Qualcomm just dropped a major macro catalyst. They are officially invading the enterprise AI data center market, directly attacking Nvidia and AMD's highest margin core infrastructure profit engines. Their next-gen high-bandwidth computing architecture features a vertical memory on compute design that completely optimizes LLM execution efficiency. First-gen silicon samples drop next year, targeting full commercial scaling by 2028. This isn't restricted to hyperscale cloud data centers. Management plans to deploy this same edge AI fabric across smartphones, AI PCs, and autonomous auto architectures, turning every consumer device into a local compute node. Near-term macro hedge funds are totally ignoring forward growth stories. Goldman's prime brokerage data shows institutional tech selling has hit its highest velocity in a decade, treating the entire chip sector as a funding source. The street is currently obsessing over a single question. What is the exact timeline for absolute ROI on AI capex? When big money begins debating near-term capital efficiency, premium tech multiples get compressed across the board. This price action is a standard, systematic factor rotation, not the death of the secular tech trend. Looking at a 2 to 3 year horizon, QCOM's structural footprint is cleaner now than during its legacy handset era. Granted, localized intraday volatility will remain elevated. A single macro print or geopolitical headline will trigger sudden 10% stop hunts. If your strategy relies on short-term delta, this tape is designed to chop you up. But if your mandate focuses on long-term structural value, these deep corrections on Tier 1 semiconductor assets, Bloomberg consensus targets are currently pinned near $220. The chart looks ugly, but the underlying thesis is immaculate. The $185 floor is holding, and the data center entry provides a massive forward catalyst. The market is just shaking out peak retail euphoria, and that's where alpha brews. If you are currently positioned in Qualcomm blocks, let me know in the comments. Is this dip a terminal value trap or the ultimate generational buying opportunity? Subscribe, smash the like button, and I'll see you on the next tape.